Hi, everyone. This is Rob Roy of Elliott Wave Options, and welcome to TradeFinder Live. If you're new joining us, the procedure looks this way. We have to go through this wonderful disclaimer, and I'm not trying to take it lightly. It is important. Take a screenshot of it, read it at your leisure. I'm not going to read it verbatim for you, but I will say that the two most important things that the regulatory bodies want to make sure that we make you aware of is that we are not registered to give individual investment advice in the United States, and any pricing that we're talking about is denoted in US dollars unless noted otherwise. So those are the two primary things that regulators seem to stress about. So again, take a screenshot of it and look at it when you can. Lots of cool things, I think, to talk about in this episode. So if you're new, let me give you a quick rundown of how this works. We'll start off by talking about the market a little bit. I'll go into where the market is. Then we will review any sort of case studies that we have closed for our subscribers on our website to give you an educational view of what we do for our subscribers. Then we'll do a review of our last few. I keep a record of the case study considerations that we give for the TradeFinder because accountability is important. And then we'll do a search and see if we can find one for this week. There's tons to look at, and actually going to bring you into it a little bit as far as whether we want to pick a directional or a non-directional case study for this week. And then I'll wrap things up with whatever time I have left with questions. So if you have a question, go ahead and ask it while you're thinking of it. The support staff will be there and answer the questions for you if they can. If it needs to come to me, I'll catch those at the end. If I glance over and look, I've got multiple screens. If I glance over and look, then I lose my train of thought. That's what happens when you get older. So I don't want to take away from the presentation. So the questions that come to me will be answered at the end. I'll get as many as I can. I may not get them all, but that's the process. So let's take a look at the chart of the market itself. Here's where we are currently in the market. And we're actually going to do a little bit of a poll because we have this triangle. If you've watched the most recent S&P 500 video update, we talked about this triangle.
Yeah, you need to change your screen. Sorry.
Nah, no worries. Actually was going to get there. I just was drawing it first, but thanks for the reminder because I will likely forget in the future. For those of you that are new, we are trying to give you the best viewing that we can as far as the clearest picture, and I'm not a technological whiz, so from what I've been instructed to do from the providers, sometimes I forget. So the guys come in and remind me so that we can make sure that you see it clearly. So right here we have this symmetrical triangle, and I want to point out something, but the poll that we're going to put up is, do you think that we're going to break to the upside or the downside? Now hang on a second before you answer. Let me give you the particulars of the market. You can see that we had this wave 3, and now we're in a triangle formation. We've already had a zigzag within the wave 3, so we know that it's a complex wave 3. And with this zigzag or this symmetrical triangle, we're making that complex wave even more. So if we break to the downside, then we come down, and this is the forecasted target for a wave 4 correction, which would make a lot of sense. If we break to the downside, that's about where you would expect the downside breakout to go. So that makes sense. If we do break to the upside, then we will likely run up and hit this target because the Elliott Wave software has determined that's a point of resistance and where the market should go on a continued upward move. And that could be a wave 3 continuation, and everything gets relabeled as far as the 5-wave pattern. So basically what I'm trying to say is that both targets make sense. So a breakout from this triangle makes a lot of sense. So the question that we're asking in the poll is, do you think we're going to break to the upside or the downside? And there's no view for sideways because with this triangle and with what I've just described, the likelihood of going sideways from here is extremely remote. So we're likely going to break down and create the wave 4 correction, or we're going to break up towards this wave 5 target, which would be testing or making new highs. And I don't want to repeat what we've done in the S&P update videos, but you can look at those as far as the potential for a larger flat, et cetera. I'll be updating another one in the next day or two. So I'm not going to cover that tonight. We have too many other things to look at, but just curious as to what you would say. And as has been the results in most of the polls that we've done, I find this fascinating because the way the markets work is you have to have a buy and sell, right? So one person has to think something's going up and the other person has to think something's going down. That's how the markets work. And so many of the polls that we've asked over the weeks of doing the TradeFinder have come out like this. It's basically 50-50. It's moving around a couple points either side of 50%, but it's pretty close to breaking to the upside, and half of you feels breaking to the upside, half of you feels breaking to the downside. I think that's just a great example of how the markets work in general terms. One other thing that I wanted to mention was I tweeted this out. So follow us on Twitter if you're not already. But last night, sometimes I post the videos or record the videos pretty late at night. I don't sleep a whole lot. Probably should sleep more than I do. And people will say, do you ever sleep? But last night, watching the futures was fascinating because there was just a normal upward bias, and then boom, the futures tanked. And it's like something just happened. And it turned out that there was some comments released from an interview that Peter Navarro did with Fox News that the U.S.-China trade deal was done. It's over with. And the futures went down literally 50 points in about the S&P futures now in about 2 3-minute bars. And then I guess somebody alerted President Trump or whatever, and he tweeted out, no, everything's fine. The trade deal is still intact. And it was just like down, straight back up. And then after we recovered the amount that it went down, it moved to the upside. And then I think I tweeted out at 5 a.m. or something that the market is at this point poised to open to the upside. And had you not been watching that throughout the night, and maybe you don't care, maybe I'm just a weird person that really enjoys watching the market, but had you not watched that going on, you'd have just gone to bed, futures were up a little, you wake up, futures are up a little, you had no idea of all the craziness that went on overnight. But if you're a futures trader, I'm sure it was quite stressful what happened last night. So I do like watching what goes on even after normal market hours, because when Europe opens, the market moves. Things happen throughout the night when other markets are opening around the world. Australia opens, etc., and things move. It moves the market. So it's fascinating to see what's going on. And to me, what's causing our futures to be where they are. There's been a lot of comments on our YouTube videos of, why are things so wild in the futures market? Well, or overnight. And some of that is the fact that the VIX is higher. And then the fact that what's happening in overseas markets with the higher VIX is creating volatility that has not been seen for a long period of time in overnight futures. Usually it's kind of quiet. Things drift a little bit one way or the other, but not to the volatility that we've had. So it's fascinating to watch. It just, I enjoy it. So that's long-winded point there that I wanted to make regarding what's going on with the futures and what a lot of people probably didn't realize went on last night. You did if you're a Twitter follower, you would have seen it and been aware of it when you woke up or whatever. But other than that, you wouldn't have seen it. All right, so I want to. We don't have an alert that we've closed out since last week, but I do want to show you something that I think you will find quite interesting on our website. And I know that I need to switch the screen, so bear with me for a second, and I will get to that. But it's we term these to be open trade alerts. If you haven't been following our YouTube videos, in addition to the S&P updates, when we close out a trade, we post a 2-minute trade review. And that's designed to be an educational tool as well, so that you can see what was the reasoning for us getting in, what was the reasoning when we got out, did we generate a profit or a loss, or what happened through that. But those are closed trades. But every now and then, if there's an open trade alert, something that's occurred with a trade that hasn't been closed out yet, but find that to be informative or educational, we want to share that with you as well. So that's what I want to show you here from our website is this position on Netflix. Now, we originally sent out the entry on May 8th, and this was an out-of-the-money butterfly, which has probably garnered the most conversation of anything that we've done in these TradeFinder videos. That usually just lights up with people asking about them. People that are very familiar with options are used to a butterfly being a strategy for range-bound stocks. So they're usually placed at the money, and you expect the stock to bounce around between some sort of support and resistance areas, and then you just churn the time premium as the stock bounces around, and that's how it makes money. So it doesn't make a great deal of money. It takes a while to make it. It's not a strategy that I'm interested in at all because that's not the way I like to trade, but that's what the strategy is designed for. But what we do is we take that butterfly strategy and make it directional by placing it out of the money. So all of the legs are out of the money. Now, by placing it directional and out of the money like that, the cost to get in is really low. So you have a low risk, and if the timing is right, high potential reward strategy. That's where you can hit some gigantic home runs if you happen to get the timing right. But timing's the key, right? Timing is always the key when it comes to options. But even if you don't get the timing right, if you just start to get the direction right, then you can generate a nice gain just as well as you would do by buying straight options or a normal debit spread, etc. And if you get in cheap enough and buy enough contracts based on whatever your risk management profile is for your own account, you can generate possibly a much higher percentage return than you would in buying straight calls or a debit spread. So the out-of-the-money butterfly is a fantastic strategy, and that's the type of thing that we like to educate our subscribers on. Is it's not just about learning the option strategies that are available. There's things that you can do with existing strategies to make them better or unique. We've taken the strangle that is almost a forgotten strategy, and we've made it as mathematically beneficial from the speed of a profit as you can in the world of options by changing the strikes and the deltas that are used in the strangle. So we've taken a basic strangle, we've kind of morphed it a bit and made it a really cool strategy that has basically been fantastic for us over time. Same type of thing with a butterfly. Take a strategy that I don't normally look twice at and made it a really cool strategy from turning it into a directional basis. So here's what we were looking at the time. So we had Netflix moving to the upside. We had an ascending triangle pattern sitting right on top of this area of support. And we know that, it's been one of the COVID stocks because people have been sitting at home. And it looked like based on this DMI. Now I'll take a little hit here because if you look at the ADX, I'm usually like stay strict to the rules. The ADX was curling to the upside. It hadn't quite broken above 20 yet. It looked like it was going to, but it hadn't quite gotten there yet. And then you have the separation forming from the two directional indicators. So it looked like an upward trend is forming. In other words, it looked like this move here of the higher lows was getting stronger, and that the likelihood was we were going to break to the upside and move higher from here. Well, then Netflix decided to derail everything, and they released some news. And so I'm going to show you a current chart of Netflix. Give me a second to change the screen over so that you can see it. Do you see that yet? I'm getting the spinning wheel of death, which I always hate. But it's not even letting me move back over to the chat window. So I'm hoping that you are currently seeing the chart of Netflix on the screen. Guys, if you could text me and let me know if that's what everybody's seeing.
You can see that, Rob.
Cool, thank you. All right, so sitting here, we had this, there's the ascending triangle, and then it looked like we were breaking out here on the 15th of May. So that looked like the upward breakout. But if you've listened to any of the videos that I've talked about, especially with these triangles, you know the rules. You need a second day, a follow through or a confirmation day. A breakout day is meaningless unless you follow through with it. And what happened? We went down the next day, we went down the following day. So there was no confirmation of the upside breakout. That's when Netflix came out and they released a news item that said they had a lot of people that were inactive. So they had a lot of subscribers that were inactive, and they were going to notify them and say, hey, we've noticed that you really haven't signed on in a while. Do you want to continue your membership? Well, that, I think, was an opportunity for some shorts to press things to the downside. I view something that occurs like this as a phenomenon known as shaking out the weak hands, where there was a contingent of people that wanted to buy into Netflix. Maybe they missed the move. Maybe they wanted to get back in here around this April time frame in here, and then they missed this big spike, and they wanted another opportunity because look where we came down to. They pushed it all the way down almost to where that breakout occurred. Or people wanted to build a bigger position. Maybe they're viewing that, the COVID thing. I got to tell you, I'm sorry, but I get sidetracked. But I went to the gym this evening. My gym's back open, and when it opened up, there was very few people in there for a couple times. And I went today, and the gym was packed. Not a single person, not one single person in the gym was wearing a mask. So, I don't know. We'll see. I've mentioned that, I think it's naive to think that with the economy reopening that we're not going to get a resurgence in the COVID virus cases. Is it going to be significant enough to matter? I don't know. We'll see. But I just found it interesting. It's just one of those things. Wow, people just freaking don't care right now anymore, which is, I think, a dangerous place to be. Remember the second black swan we talked about, anarchy? You watched the news lately? Anyway, so the move to the upside here, because of this downward move, took a little bit longer. So seeing that was going to take longer, and June expiration was last Friday, that butterfly expired worthless. So that's 100% loss. Well, we've now cut that loss in half because we rolled that out to a new butterfly out to July. And the new butterfly is here in July with a lower strike at 480, a mid strike at 500, and then the higher strike at 520. So that's where you generate, and I want to be clear about this on these out of the money butterflies. If the stock moves into these wings in this area here, that's where you generate the greatest amount of gain. And the closer you get to expiration and the closer we are to this midpoint, the greater the profit becomes. Well, look what's happened over the past 2 days. And the previous butterfly expired last Friday. Had these two moves happened Thursday and Friday of last week, then the previous butterfly would have been not just a home run, but a grand slam trade. It would have been one of those huge trades that I was talking about with a massive percent return. That's how important, that's how finite timing is in the world of trading. And that's why trading is not as easy as most people think it is. The old expression, don't confuse genius with a bull market. When the market's going straight up, everybody makes money. But when things get a little squirrely and volatility comes into the mix, it changes the game drastically. But the fact that the pattern is still intact, and that's the key with making adjustments. At Elliott Wave Options, we believe in making adjustments if you still have a viable pattern. Why just simply take 100% loss on a trade and walk away if the pattern hasn't changed? If the potential move to the upside hasn't changed, we're still looking to move up to that 500 level. Same target that we had initially, the round number type of a target. So just because we had this wave 4 correction that occurred here instead of the wave 3 continuing up to that level, which sometimes happens, the wave 4 happens, that's pure Elliott wave. So don't walk away from the pattern just because one of the things that's likely to happen did occur in this case. And so what's occurred is that the move to the upside just in these previous couple of days has already recovered half the loss that we had from the trade that expired just on Friday. So that's the adjustment process, and I thought that would be an educational thing to share with you because I know there's a lot of education out there that says, just put on a trade. If it's a losing trade, that's it, move away. have your loss exits, have your profit targets, and it's all black and white like that. I just don't think the world of trading is that black and white. There are instances where, hey, the pattern changed. That happens. Take the loss, move on to something else. That scenario happens. But if the situation or the pattern hasn't changed and it was strong enough for you to put a position on in the first place, why walk away from it? I don't think that makes any sense. So anyway, I wanted to share that with you. Now let's go ahead and take a look at a few. Now we closed out we had actually sent out the TSM one to our subscribers. That turned out to be an alert as well. And that's what our subscribers get. We actually send out alerts. We talk about case study considerations here and we just look at patterns, but our subscribers actually get the benefit of having full-on alerts. We send out, here's the trade. This is what you want to get in. This is the price you're looking for. These are the strikes. All the details are there, and then any adjustments and exits, because I know some subscriber services only send out entries, which don't make any sense to me. You're going to get people into positions and not help them with when to get out. I don't get that, but there's a lot of them out there. But we send out alerts on entries, any adjustments, and exits. So the TSM one, so let's start with the next one in line. So this would have been 1, 2, 3. This would have been 4 weeks ago. MNST was the case study that we looked at there. And you can see that we are moving to the upside pretty slowly here. We had a move up and then a wave forward. This looks awfully similar to the Netflix trade, doesn't it? Just the wave forward didn't correct as much and move back up. So this one's working well. If you have a bullish position, it's only slightly profitable. It was more profitable unless you actually would have taken a gain back here on the 1st of June. But otherwise, because we had like 3 or 4 days right after the TradeFinder event where we went up, and depending on what your profit targets are, you could have gotten out there. But if you're still in the position, then it's moving back to the upside. Here's the one of all the weeks that we've been doing these, the one problem child that we've had is this one. And this had to do with a downgrade from an analyst. And so we moved back down. Now, what you would want to consider doing this, and again, not giving anybody individual investment advice, but with that move to the upside that fell apart when the analyst came out and downgraded it, and that's where you wonder, well, did they just want to get in? Were they looking to add to a position? There's been a lot of rotation in the market. Look where we found support. Found support right here, which makes a lot of sense from support resistance level. And now we've gone into not the best, but a bit of a triangle. So you could adjust your position by adding a triangle to this if you wanted to. We'll see how this plays out. This could be, we actually did not send this one as an alert to our subscribers, but it could be the first position in all of the weeks that we've been doing the TradeFinder that ends up in a loss. We'll see. It has to happen at some point in time. That may be the one, but we're not there yet. And then here, if you followed Apple, which that's a no-brainer, obviously, right? But if you followed that one, I mean, look at that move. So how greedy do you want to be on Apple? I mean, it's been basically overbought for quite a while. You look at the Elliott wave pattern, and we're in a wave 3. And just you look here, it's very difficult to continue to chase this with the ADX that far above the directional indicators, but they're starting to separate again. And if that positive directional indicator somehow moves above the ADX, that wouldn't be a point to exit. But at this point in time, you literally should have been out about a week ago based on where we are with the ADX, showing that the strongest part of the move is over. And not only is the strongest part of the move over, we got well above 40 with the ADX. And so it was difficult to chase it. Now, we had a bit of a gap up today. So is that a little bit of a blow off top? We want to check volume to see, and there was better than average volume today. Not the kind of volume that you usually get on what's known as a blow off top. That's when you have a big gap to the upside on massive volume. It's like everybody's like, fine, I need to get in. I've missed it, but I need to get in. that's what a blow off top is. Not quite as much volume as you would normally see in something like that, but with the gap to the upside there, you could make a case that, maybe we really are running out of steam here, but that one's been a fantastic one. And then last week we did ZTO. So here's the pattern on ZTO. So on Friday, we had a big up day, and then we came back down a bit yesterday, a little bit back to the upside today with a doji. So it's moved up since last week, but it has not reached our profit target yet, which is right here. And you look at the DMI, the good part is the ADX is still moving up. So that's positive. The negative is you'd much rather see this positive directional indicator higher than the ADX as far as the move is going to continue for a while. Now remember, things can be overbought or oversold for a period of time. It's not an indefinite period of time though. When something registered as being overbought or oversold, especially with our set of indicators, there's a little bit of a time limit on, okay, it could continue that move for a little while, but we know it's about over. And so we want to keep an eye on this to see if that's going to continue up or if we're done here. It's hard to imagine that it doesn't go up and hit the target, but note this, we did on Friday make it within the target range. So you would have to say that, well, we got in the range. We haven't hit the midpoint of it, but we did move to within the range here that was shown. So from an Elliott wave standpoint, that's a winner. It got there. And that's when you have to start to decide how greedy do you want to be? How much profit do you want to look for on your own trades? And that's always a challenging thing in the world of trading anyway, is how much of a profit do you want? How long are you willing to stay and risk the profit that you have before you make an exit? There's another expression, you can't go broke taking a profit. So things to consider along those lines. So hopefully you're not looking at me. I hope that's not what's happening. Are we back on the chart?
It's back on the chart, Rob.
Cool. All right. Something else that I wanted to show you real quick before we look at our potential case studies our week this week is our website. We've updated the front page, still have a picture of me there, but here's our graph of our trades that we've had. And what I wanted to show you, because I think this is important for people to understand, is we had a big month in January. You can see that big spike up. Now this is the cumulative total. So this is our two primary portfolios, which is the impulse and the volatility portfolios. And I'll talk about this. And there actually was a question that was sent into support today about this. So I thought I'd just answer it for everybody. We had a big month to the upside in January. Well, then we know what happened, right? When all the COVID stuff happened. And so we've leveled off a bit. We've been up a little bit, down a little bit, but we've pretty much leveled off throughout that time frame. And some people would probably say, oh yeah, well, everybody made money on this bounce to the upside. Well, how many people got blown out on the way down? A lot did. And I know a lot of people got blown out on the way up that were shorting the market, thinking that, the bottom was not in yet. We were going to continue lower. And when you short stocks, you short the market and you're wrong, that can be brutally painful. That's even worse than trading to the upside and being wrong. At least there's a limit to what you can lose there. But when you short the market, now you have unlimited risk. And so just as many, if not more, really smart people got blown out of the market on the way up as did on the way down. But clicking here, you can click to see the full track record, and this breaks it out for you and shows that here's our two primary portfolios, the impulse and the volatility. So It breaks it down to the percentage of winning trades. 76% is pretty good. Since we started in January of 2018, our cumulative return is 323%, and that's not compounded. Okay, that's not a compounded return. We're not taking the profits and putting on larger positions. It's the same position every single time because we're constantly adding new subscribers. That's not fair to a new subscriber to come on and try to put on huge trades in compared to those that got in back here. But when we look at these two, you can click on these buttons and see the individual performance. When you look at the impulse strategy, you can see, well, since that January peak, we kind of come down a little bit. So we're actually slightly lower than we were back after that January peak. So the impulse strategy is down a little bit over the last couple of months. But when you look at the volatility strategy, which this makes sense because what's happened with the market, it's been very volatile, right? Look at the past few months there. It's been up. So now you can see why overall we're kind of flat. Big month in January, flat for the past few months. One of the portfolios is down a bit. The other one is up a bit. That's the importance of being involved in both of them because it covers all market conditions. The impulse strategy is directional, and you can profit to upside or downside moves. And then the volatility strategy is when we don't pick a direction, we look for those consolidation patterns and let the market pick it. So I wanted to share that with you because that's the benefit that our subscribers enjoy. And plus the question that was answered, why don't I just pick one? The impulse over time has done better. Well, it should because it's directional and you make a higher percentage return, but the volatility strategy has its place, and it's certainly shown that over the past couple of weeks. So anyway, I wanted to share that with you. So let's go ahead and run the search, and it's pretty easy to do so. See what window we're on. You come up here, and if you are a subscriber, you can go to pre-computed scans, and everything is already shown. So here was the question that I was curious. Would you want this week to look at one of the bullish directional positions for our case study this week, or one of the triangles, which is in the consolidating stocks? 146 is a massive number. You almost never see that many. Usually it's less than half of that. But that's what happens when the market itself is consolidating. You know the rules. The majority of stocks follow the market. So if the market is consolidating, there's a great number of stocks that are consolidating. So would you want to look at and we're not going to look at them all, and we'll just pick and choose a few in the time that we have, or would you want to try to find something on the directional bias? What do you think?
Well, to just share the actual application rather than the whole desktop, it may clear the screen up a little.
I thought it was. I guess it kicked me off when I switched it over. So here's the consolidating stocks. There's 146. The impulse, there's 12. The results that are on the screen right there are from the impulse, but we can switch over. So basically, do you want a directional position to the upside, or do you want a non-directional position? All right, everybody wants directional, so let's go with that. So here we are. Here's the 12 potential positions here. Usually what I do when I look at these is the first thing is I want to see, is there anything that looks familiar, something that shows up a lot? And that's interesting that HSIC is still on the search. Remember, that's the one that I was telling you about from 3 weeks ago that could have potentially been the first losing case study consideration that we've had here with TradeFinder, but it's still on the search to go to the upside, so don't count it out yet. But Oracle obviously is a big name, so let's start there and take a look at Oracle. Put the Elliott wave pattern on, and always want to see where's the DMI, And on the DMI here, you can see that the ADX is still kind of low. So that's not too exciting from that standpoint. Potential move back to the upside. We'll see. That doesn't look all that exciting to me. So let's go back and see. Look at something. United. Gosh, the airlines have been. There's two of them though, and then there's three actually. Look at that. There's Allegiant, Delta, United. You have to pay attention when they're all on there. It's hard to imagine with the bounces that they've had already, but let's take a look at them. So Delta is, this is more of a triangle pattern than it is a directional pattern to the upside. And it actually looks like it wants to go lower. Let me just make sure that I got this. Well, that's why. It was the wrong search. That makes a lot of sense. All right, so let's start over. I like ISRG, so let's look there. Yeah, this makes a little bit more sense on the pattern and the DMI. So looking with this, the ADX moving to the upside between the two directional indicators, breaking above 20. Yep, that looks a lot better. The problem is that there's resistance here at 620. Gosh, I can remember when this was back in these days at the end of 2018 when it was a $400 stock. Now, when the market corrected, it went back down to just under 400. So big move to the upside. If you're not sure, this is robotic surgery is basically what this stock does. So it's kind of on the cutting edge when it first came out. There's other competition now, but they're still the market leader. The problem is, though, there is resistance there at 620, and we're at 588. So there's not a whole lot of movement before we do actually hit some resistance. So maybe we want to take a look somewhere else. Paycom, we actually have an alert on this for our subscribers, but we can take a look here, and you see that the ADX is curling up, good separation between the two directional indicators. We have a little small ascending triangle forming here, indicating that we're likely going to break out. So this is a good example of what I was concerned about with the one on Intuitive Surgical. So see how we ran up, and then we've gotten right near this area here where the wave 5 is. So you can just draw this line right in through here because we closed there, which is, we touched the top of that line on the 10th of June, even though this bar opened higher on the 5th of February, it closed much lower. So you could argue that the place to put it is right here, with the closing price being the more important price on the 4th of February, and then that's what we touched on the 10th. So that's why I was saying with Intuitive that we were going to have some resistance there at the previous 5. There's a perfect example of what I was talking about, is the fact that this one hit that level, and then what happened the very next day. So the day we touched that line where the wave 5 was, we moved back down. Now that you can say, well, that coincided with the market. Well, is that the reason why? Just because the market goes down doesn't mean every stock goes down. Yes, the majority of stocks follow the market, but some stocks move in the opposite direction. Money has to move and rotate somewhere. That's based on perspective from investment accounts. It's the way it has to work. So moving to the upside here, you can see that we're running into this area of resistance again, but we got there before, and now it looks like the DMI has said, yeah, we're not giving up here. So we kind of took a little pause here, but we're regaining strength. So it's one of those things where maybe this move was just a bit too vertical, kind of ran out of steam, ran out of energy, momentum, had some resistance when it got to there, wasn't able to break through that previous 5 on that run, but it's trying again. and there's some consolidation there to break out. So that's a pretty interesting pattern to look at right there. Let's pick a couple more, and then I'll finish up with some questions. Taiwan Semiconductor, we already had that one as a triangle that broke out nicely. TMO has shown up in the past, so let's take a look at this one. Some of these stock prices of stocks that I'm familiar with from the past are just absolutely phenomenal. So TMO is moving up here. Let's see what the DMI looks like. The ADX is starting to crawl back up. Separation occurring again from the two directional indicators, so that looks good. The target is at 380. We're at 356, so that one has some pretty good room too. And I like this wave 4 in the neighborhood of the 38% fib retracement level. So that should act as pretty good support there. We filled this gap already back over here. Still a tiny one there, it looks like, but that's probably down the road with the market. But moving up here, we just broke to new highs, so we've broken above the wave 3. That looks pretty good too. What the options look like on TMO. August just started trading, so there's not a whole lot of open interest there, but it's pretty good. And it looks fine for September. So for September options, looks pretty good. I know Paycom's options, because as I said, we already have an alert on that. And then Intuitive, I know that's pretty liquid as well. So any of those three are very liquid. One last one, and then we'll pick one. And we'll pick match. The online dating things have been doing well because of everybody being at home. Look at that zigzag pattern. Yeah, I love it when you see stuff like this. When people that question whether or not this stuff really works or not, just don't spend enough time looking at it. So there's a 50% corrective level in the B. The C is at 61.8. So the zigzag pattern is showing. So this is where you're like, all right, how far does the wave 5 go? Look where the wave 4 corrected to too. This is going to be tough to avoid because it's such of a classic Elliott wave pattern. And my point here is the wave 4 corrected basically to the 61.8% level. Now we've got a zigzag in the wave 5. So we have a complex wave 5 with a target at 105, and we're at 98. It hit this, it's backed up, it hit the previous fib level, it's moved to the upside. The DMI looks great. This actually looks like the best of all of them. See if there's options. It was up $3 today, so it had a good day today. Wow, it's interesting. There's a ton of strikes. This must have gone through a split recently. It's got some oddball strikes. But yeah, open interest is fine. The options are fine. Few of them have some wide spreads. They could just be after hours stuff. So contingent on, because the spreads aren't wide for August, but you go to September and they're super wide. If you did a spread for August, I don't think August is far enough to do straight options. But if you did a spread in August, they're actually a little wide, but they're not crazy wide like they are in September. But there's a lot of open interest, so that doesn't make sense that the spreads are that wide. I think this is just one of those after hours phenomenons because it had a pretty big day to the upside. They just widen the spreads on the close, and when we get to the point where the market opens tomorrow, the spreads will tighten back up. The reason they do this is exactly what happened last night. Wild stuff happening in the futures overnight. Now imagine if President Trump didn't retweet that, oh, yeah, the U.S.-China trade deal is still okay. And it was just the news that the China trade deal was, quote, over, which is what Peter Navarro had said. Who knows where the market would have opened this morning, because the futures were tanking in a very short period of time. So it could have been a completely different day today had that not been reversed. So, traders know that, and they know that wild stuff can happen overnight, and they don't want to be exposed. So spreads tend to widen when the VIX is elevated, as it is now. And that may just be the phenomenon there. But I think that looks really good. So I'm going to make a note that that's the one that we're going to use for the case study this week. So stock symbol, if you're having trouble seeing the screen, is MTCH. MTCH is the symbol for match. And the price target is 105. So $7 move from here. So that should be enough to generate a pretty nice gain in the position. There's a lot of short interest. That's perfect. That's what you want. When you have a lot of short interest in a stock, any sort of a bullish move forces all those shorts. There's actually a theory there of people that when they're looking for bullish patterns, they want to go analyze the short interest. The only problem with that is that severely limits the number of trades that you can put on if that's one of your primary criteria. But if that's an ancillary criteria and you see that, okay, all of your indicators are giving you the go sign on a particular stock, and then you notice that it has very high short interest, remember, the market tends to do the opposite of what the majority of people think. Now, the majority of people are almost never short a stock. But when you have an elevated amount of shorts, an abnormally high number of shorts, then it doesn't take much good news to cause all of those shorts to cover. And you get a big spike to the upside as the shorts cover their short positions and they buy. So you get a momentum run, forces the shorts to cover, and that gives you that kind of a blow off top type of a scenario, which you could easily see happening if that's true. So I appreciate somebody saying that. Facebook, we can look at Facebook. That wasn't on the search though, was it? I tend to stay with what shows up from the results, but we'll take a look at the pattern and see. So FB, Frank Bravo, is the symbol for Facebook. And you're right, it did break from a bit of a consolidation right there at 240. Wasn't really much of a triangle, was it? I mean, it was more of a sideways consolidation. And this is, really indicative of why I don't like doing the at the money butterflies for sideways positions. Because here you had a 240 resistance level, a 220 support. You're bouncing around in there and you're thinking, okay, I'll put on an at the money butterfly and hopefully we'll get this to go sideways for a couple months and be able to work off some of the time decay. And then boom, it breaks out. And then you're like, whatever little gain that you may have had for a week or something of it bouncing around is wiped out and gone. That's the danger of trading purely sideways stocks. So that's why we like the consolidation patterns that are going to break one direction or the other. And we're not crossing our fingers. Okay, please stay sideways. That's a hard way to trade, in my opinion. So we don't do that. But with this break here, looks like it can continue up. The DMI looks pretty good. Something must not be triggering it on our search though, but it doesn't look too bad, honestly. I give you that. That was a good call on breaking out of that resistance level, and it could send it higher. Let's see what the volume looks like. Yeah, better than average volume. So that was a pretty decent move today. It really was. So good call there. The flag, somebody asked a question about, is this a flag pattern? And some people view this as a flag where you have, there's the master, the post, and then it goes sideways. I tend to view it when you have more of a pattern like this, which is, I really love this symmetrical triangle following a fairly vertical move up. as more of the flag style with a symmetrical triangle. That pattern tends to break out, but others will view this sideways thing. So I don't know that there's a hard, fast rule one way or the other. I think it's just a personal preference thing on what you consider a flag. Obviously, if you're looking at like a United States flag, that's rectangular, so that would make sense, right? It's maybe it's just my golf bias on the point. Much longer would Fib suggest wave 3 for this for Facebook? Well, I don't know that there's a corrective pattern in there that would give us any sort of a target, which becomes the challenge when you're trading the wave 3. See, that didn't, there's not enough of you're still in an impulse move. So there's no answer to that. All right, Jonathan, you've asked a few times, so we'll pull up Slack, which is work. We actually have an alert on this too for our subscribers. Where we had this pretty vertical move. Then we came back down on a really good earnings report. The earnings report was fantastic, but maybe the expectation was unrealistic, or it was just simply a buy the rumor, sell the news type of an event. But very similar to what happened with Netflix, where you had the wave 3, then you hit the wave 4 correction, and now it's starting to move back up. Our viewpoint is to come fill this gap. That's what we're looking for our subscribers. Obviously, Elliott Wave is saying that that's not far enough. We're likely going to move all the way up to the wave 5, and maybe we will, but we'll already have the gain we're looking for just with getting the gap closed. So I'm not sure. We'll just evaluate the indicators when we get there and see what it looks like. But I would think that with the resurgence of the virus cases, locally here, a couple restaurants have had, and I'm pretty in tune with that because I don't cook. So going out to eat's a big part of my social life. And a couple of the restaurants that haven't been open that long have younger people. And that's one of the issues that's been occurring in Florida is that the new cases, the average, we had a record on Friday and we've had slightly higher records, and the average is in the high 20s as far as age group. So this is not elderly people getting sick. Now younger people are getting sick, and the viewpoint is that they haven't taken it seriously enough. They're not taking precautions, and now young people are getting sick. The conspiracy theorists are saying that, well, the virus is mutating. I don't know. I'm not a doctor. I've never claimed to be. You've heard me say that before. I don't know what's going on with any of that stuff, but I do know that there's a couple of the restaurants that I frequent are closing back down. They're shutting back down because they've got multiple servers that have come down with the virus. And so they're closing up again. And then they're going to clean everything and, retest everybody and start over. I don't know how long they'll be shut down, but they're literally going to shut down. Anyway, long-winded point is that if we do start to see more things like that, yeah, you would see technology like this. You could see Facebook. Some of the other ones that we've talked about, Netflix, those are the stocks that were COVID stocks originally that will probably recapture a bid. So from that standpoint, I think there's some fundamental support in addition to a really good Elliott Wave pattern here. So I want to wrap things up because I want to be very mindful of your time. Appreciate it. We've done really well. Hope you enjoyed that viewpoint of the website. If you'd like to get actual alerts on these things, sign up. It's really a no-brainer to become a subscriber. We don't make you sign up for a year. You just sign up for a month. Give us a try. If you don't like it, you can stop after a month. So you don't have to pay for a year, 6 months, or anything in advance, anything along those lines. We do month by month, and we literally put our money where our mouth is, and performance speaks for itself. So you kick the tires, give it a try for a month, see what happens. I would suggest, though, that you follow along with what I showed you. It's important to have both of the portfolios because you can see over the last couple of months, you would have been down in one account, you would have been up in the other. If you got them both, you're saying, all right, I've survived some really wild volatility. still in the game, still looking to move higher from here. And so far, June's been pretty good. Knock on wood. So thanks for your attention. Appreciate it. See you again next week. Take care, everybody, and be safe. Please be safe. Thanks.